Everyone, I think we are getting live finally. Good afternoon, everybody. Good afternoon. So we are going to talk, everybody, about market corrections versus market crash. Key concept with today's gap down. Everybody got nervous at the open this morning, and I think it's critical to think about market crash versus market corrections over time, a strong philosophy to look at this. So we're going to look at charts. Before we do that, I got to send the link to our group here for those who can join. I'll send it here. And right here now. And let's go. Okay, good afternoon, everybody on YouTube land. So again, we are going to go through charts. I have Fred with me. Everyone, I think I have Travis. Let's go through very important concept that is going to help you understanding the way I look at the market, especially for your long-term investing and the market behavior or market corrections versus day trading those drops here. So let's go and let's go to chart. So if you look, guys, on average, okay, everybody, those are the worst crash days, besides 1929 in the market. There was a 9% in 2020, during the COVID, there was another 7.8%, right? In 2008, we had 7%. But here's what happened. And this is where it's important, most bear market, everybody, last 18 months to 24 months. Okay, those are most of the bear market, 18 months to 24 months. And the market usually can drop as much as 50% as we've seen in 2008 during the housing bubble or the internet bubble, 50 to 60%, right? But typically a correction is 10 to 15% in definition, okay? That's a correction. And usually 80% of the time when we have a correction, the market rebounds, everybody. The market rebounds and it presents a buying opportunity for some of the stocks that you like. So key here, bear market. Okay, and I'll go through charts of what's going on today. We'll browse through. Bear markets last, usually 18, 24 months. Drop 50, 60% from top, right? Corrections, they happen at least every year at the tune of 13.8% retracement from the top. COVID drop was 34% from the top. So today, with NEO dropping from the 60s to the low 40s, with Tesla dropping, do we have the beginning of something serious or do we have a correction? So let's go through some charts and hopefully that's going to help you guys, okay? So number one, I told everybody when you look at the full pro tool and the retail tools, the double cloud tools, to kind of look at what happened in 2001. What happened in 2001, and everybody is going to be super telling everybody to help you. And I want to show you a aha moment before we go to today's charts where they are squeezing to resistance. So look, if you look today on the full pro tool, you look at the daily charts, here's what we have. We have a shoulder here. We have a shoulder range here. We have that head, which we have stayed for weeks here towards the top with low implied volatility, low VIX at the 1921 VIX. And now we have exploded with this gap down. If you look here, this stayed about 10 days. I want to see what's going to happen for the next 10 days on the right side of that range, which is what? 382 to 375. So I repeat, 382 on the bottom here, 375 SPY to the resistance where we are going to reach here, which is 389.5. So I have a 389.5 resistance. And of course, if we go back to the red dash, we have a 395. And this is where you are. And the box really is 389 to 382 right now. So this morning, they tried to undercut that right shoulder, everybody. They tried to undercut that right shoulder, but they have not able to sustain below the box support. You know, so they come back to resistance. They were oversold this morning. But here's my problem. Look here, the daily, the 60, and the weekly charts are about to show a down cross MACD on the SPY. And that is not good. So let's pull the SPY weekly chart. And you'll see the blue dots are still intact. The up arrows are still intact, right, since March. But look what's happening. This is a case where the MACDs are fighting for this week. And if those MACDs cross down this week, finishes the week crossing down both MACDs, that's not going to be good. So you want to make sure those MACDs are not crossing down. You want to make sure you pay attention to that range. I just gave you 375, 382.5 on the bottom, 389.5 on the top with the 395. This is the range. This is the ping pong range that we have right now, right this second. Now, the philosophy. I want to show you some concept. I talked about Palantir in the room. I had a short 120 put to buy the Palantir 20. So let's look at Palantir. I'm going to take Palantir as a case study for a market crash or a market correction. Everybody knows, it's no secret, that I like this stock at this point. All right, and there's very few stocks that I like, and Palantir is one of them. Right, the day trading zones has huge support here towards this 22.33. Look what the tail end this morning was at 23.81. The middle part of the double top is here, 23.20. So everything on Palantir around 22 is interesting. 22 is interesting to me. If I go to the full Pro Tool and I replace the SPY charts by Palantir, let's do that. Wait. PLTR. Well, actually, no, you know what? I'm going to replace VTI on your left. Palantir. Look, Palantir has gone as high, guys, right, as $45, right? So I'm using this Palantir case study for market corrections versus market crash. 45. If I take 45 times 50% retracement, I'm at 22.5. My zones are showing here 12 to 22. This is a fantastic buy here on Palantir. And I am having an eye on the middle part here at 23.50. And we touched 23.90. So if you look at Palantir, we went at 23 from 45. That's already a 40% retracement from the top. So it is not a bad idea as Palantir goes down, goes down, goes down. This is a stock that I want to accumulate, no problem, between 12 and 23 here. So you can sell. I was selling the 20 puts, guys, and I started the trifecta of income for $1.25. We covered this morning at $1.10. By the way, there was an error in the app. It shows 11. It was an error. So 11.10. Now, as Palantir drops, if it drops again, and the puts gets richer, I'm going to sell again the Palantir, but this time I'll sell the Palantir 17.5. I continue selling the 15 Palantir, the 20 Palantir. Why? Because I don't mind owning the stock. Those corrections, those opportunity of 50% retracement from the top, guys, are crash or corrections that allows you the opportunity to re-enter the stock for the long term and create true wealth over time. Now, not the same for me in my mind with the SPY. If you look on the left and you look at a VTI on SPY chart, which I love, It's 208 high. For me to re-enter and buy a lot of VTI here, I would have to go back around here, this inverse head and shoulder from the COVID at least, which is around this 150, right? So VTI, for instance, for me personally, is not yet retracing enough for me to make it a buy. But if you go case by case, Apple, which I was short Apple, I called the short Apple on the stream last week, the week before, like for about 4 weeks, guys, we've been short the Apple, and we just closed a 140, 115 debit spread with Apple June, which we made over 30% return or around the 30% return. That is what you need to do. Look case by case. Number one, did you have a correction in any of the stock or ETF that you like, which would qualify it as a 10 to 14% drop, right? That's number one. 80% of the time, I repeat, that there is a 10 to 14% drop, guys, 80% of the time it's a buying opportunity. Assuming now the VIX has more to go on the upside and there's more fear going into the market, then you go stock by stock, case by case. The indices look to me like they could have more to go. Like as I showed you in the Full Pro tool, it looks to me, right, that if you look at SPY, right, we are forming that shoulder here, all right? And we are squeezing today because we came from an oversold level and we are squeezing, right? And I want you to study, you know, the rounded top that happened in 2001, guys. In 2001, between the end of February 2001 to the end of March 2001, the market was fighting like this, sideways. And it finally cracked. It came back till September 2001. And I think it is critical, guys, that you study the 2001 patterns, because we are very, very similar right now to a market that exhibit some of the same similarity than we had back then in 2001 in those head and shoulder. I want to show you a picture of the volume indicator today. The way we looked at it, we called the bottom perfectly with our room this morning. Look, volume indicator turned this morning, net buyers at minus 73 at 10 o'clock, 10, between 10 o'clock, 10:10, we had the confirmation. You look at the SPY 5-minute chart, and you'll see, I'm going to compress at about 10 o'clock this morning, we started retaking, see, this 282 around here. Up arrow started flashing right there, blew that. They held a higher low, blew up arrow again at 1 o'clock around this 382.5. 382.5 was our major one. Up arrow, blew that, blue segment, and helped us to stay in the trade, going to the resistance of the weekly chart that I was showing you, right? And you can see it even on the here, the 60-minute chart can show you that as well. All right. So look, here's the 60-minute chart, and you see all it does here, it's come back to resistance. And you have to be careful because you don't want to be caught in a position where tomorrow this 389 area rejects again with a new gap, because they need to prove that they are going to hold that left shoulder, and this is everything here's ahead. So you need to be careful that they are constructing a shoulder here in the market. One thing also that leads me to believe that there might be more gap down coming for the next few weeks is, look, we are just barely, if you look at the VIX chart, we are just barely touching the same numbers that we had previously that are clockwise rebounding. Look, so let me show you. Here, okay, and we are here. So it means that each time, right, since May, June there, we are around this 2150 there on the VIX, or we dip below the day trading zones right around between that 18 and 21, right? It presents lows of fear, where everybody is super complacent. And it goes to what? But look here, it went to 28, it went to 31, it went to a series of 29. So, and then when you get extreme, it goes towards the 37 there, okay? So like around here, 37. So from what I can see on the VIX, this 1921 is support, and this 2837 is the resistance. And I think the VIX here, the fear factor that everybody is following, is giving you a good indication. So I think you need to be careful on some stocks like Tesla, might not have completed yet. NIO got destroyed, guys. It was at 60 something. You know, talk about correction or crash. Well, you look at this one, you know, it presented a buy opportunity probably this morning. How do I know? Because it holds the middle part of this double top here. This 38.50 is going to be critical. Plus, NIO is at the zero line. Zero line here. If there's a rebound on NIO, that zero line will be critical. So you come back for the rest of the week, and that 50-80 becomes huge resistance on NIO, big support at 38. So this is where I would look at here. You know, this 53.39 NIO is going to be critical for the rest of the week on NIO, same as the SPY 389.90. So you see, all of those present buy opportunity. NIO was 66, dropped this morning to 41. That's a 26-point drop. 26 divided by 60, what? I told you 65, right? 67, right? So 26 divided by 67, you had a 38-point drop, 39% drop on NIO. So 39% drop, you know, in the last few weeks on NIO. Palantir, 40% drop, right? And all those stocks, usually when they drop 50% from the top to 60% from the top, they present great opportunity, great buys opportunity. So I want you to keep in mind the big picture. Granted that if you are in the day trading room, and day trading has a lot of risk, it's not easy. 90% of the day trader lose money. Timing the market is not easy. Just those concepts that I showed you today, you know, are very helpful, because all you do is you look at the best stuff that you look, you wait either the 14% drop or the 50-60% drop, and you re-enter clockwise, or you add into your assets that you like, or at the very least sell some naked put lower, right? See, if I look at the day trading zones on NIO and I see NIO to 30, well, I might want to wait for NIO to drop like it did today. Drop. Boom, I open the 25 NIO in case the market keeps on going on the downside. So I would sell the 25-35 NIO puts. And then if I get a sun, so what? It's fine, because I'm getting a stock that has already dropped, a high growing stock that has already dropped 50%. Does that make sense, everybody? On the feed on YouTube, I'm trying to help you guys. Your like, comments would be helpful, because I'm trying to help you with all of this, guys. And those are our PM sessions. I want to help you. You know, we are not going to do the AM session on Tuesday. It's going to be 2:45 p.m. Monday, Tuesday, Wednesday, Thursday, guys. We're going to try to give you as much as possible. So let me recap the strategy and this. And of course, as I showed you earlier on, right, you use, I don't know where it was, market correction, right there. Is it market correction? That's the VIX, and blah, blah, blah. And see, like I showed you, the VIX is towards the low of the past few weeks. Anyway, so let's recap a couple of things that are key. Bear market lasts 18 to 24 months. They drop usually the market from the top of the indices 50 to 60%. Those are the best time ever to enter. But every year, so that's another bullet point. Every year, the market drops at the tune of 13.8%, everybody. COVID drop was 34%. 80% of the time, I repeat, 80% of the time, when these shallow corrections happen, right? This was a buy up for the past 75 years, guys. So this is pretty solid, right? Especially if you buy the indices like VTSAX or VTI, right? Now, Palantir, from top to bottom, dropped 40%, right? NEO, from top to bottom, dropped this morning at the low, dropped about 38%. So we are not quite at the 50-60% that I would like to see to rush into those stocks, but this is super profound, guys. This is super powerful. And so, of course, support resistance here is key, the way we were in the Mastery Trading Room, live room this morning. But these concepts are key because then you are, look, over time, especially for your wealth pyramid, timing the market is never a great thing. But those simple rules of waiting for either the top of the day trading zones to come to you, let's say on the stock like NEO, which would be 29 to 38.5. That is a great area of re-entering the NEO, right? So I don't think NEO is completely out of the woods yet. I think 55 might complete towards the 30, 40, but this is how you make the money. Same, when we were short on Apple, we felt that Apple was quite weak for some weeks. The MACDs had already double top, for a long time. We had seen the lower high on this slow MACD when the market made a new high on Apple. As soon as they recrossed the previous high of 138, guys, we were short the Apple. But look, if I look at Apple high is 145, I take 50% off, would be around 75.90. I compress everything, and what's the great zone to buy Apple? Well, I know already in advance from looking at our full Pro Tour, it will be 95. So 95 is great support. 116 was the key of the day, which I gave on social media, right? In my post and my videos from yesterday, 125 to 117. And here, 138. So all you have to know at this point on a stock like Apple is point A to point B, point A to point B. And just wait for those retracements, guys, from 50%, 60% from the top, and have day trading zones or support and resistance area that helps you, not necessarily our stuff, guys, but stuff that helps you to find support and resistance. Look, this morning, I couldn't find clear support and resistance on the full Pro Tool, which is much more comprehensive than the double cloud tools on Palantir, and I went to the Palantir, and then I went to Palantir, and I said, okay, if this thing continue crashes past the middle part of 22, what am I doing? And then I found 12 to 18 plus 22. So now I have my targets on Palantir, etc., etc. So guys, if you want us to look at some of your charts, we'll be happy to do so. But remember the thing, and that's the most important. If I look at a chart of VTI over time on the wealth pyramid, when you use tax efficiency, asset protection, or you sell also income on the trifecta of selling secured put or doing cash cover calls for extra income, remember, if I put a VTI or SPY on a monthly chart, even though there is bruise and along the way, guys, over time, each pullbacks over the next 10 years, 20 years will provide you great opportunity. What I am afraid for everybody at this point is that you see the market here that is extremely high. This is a monthly chart since 1994. And of course, you prefer buying here when we went down for the internet bubble for 3 years, minus 50%. You want to go down and buy as much as you go when it goes down 60% from the top. We continue, even after today, to have extreme complacency, extremely strong MACD on the monthly, and you got to be careful that this correction around this 3,900 is not over until we reach 3,700 or below, guys, into the market. So I hope it helps. This was, again, my take is that over time, you buy stocks, the stuff that you like, on every pullback over 40%, 50%, 60%. It's a great gift that the world is giving you, right? But don't forget also the guys that know to surf timing with puts, with the right option strategies, the right tools. This is where they make fortunes. You make fortunes on down moves, guys, because the velocity of the down move is way faster than the up move. It might take 4 weeks for the market on NEO to go from 40 to 65. It took 2 days or 7 days on NEO to go from 63 back to 40. So you see the velocity on the downside is much stronger, and people who know to make money when the market goes down make a lot of money, guys. This is some of the principle I used when I took the $10,000 account to $42,000 account, trading the SPY. Check this video. If you don't know us, it will show you some of those principles, but I do it with small accounts. See, if you scroll down through our channel, you'll find this video somewhere. And where is it? And urge you to watch it here, this one, small trading account growth. And you got to understand that this is highly risky, but it's highly rewardable as well. It's high risk, high reward. And I like to do it with tiny accounts between $5,000 to $10,000, small accounts, right? This was streamed on YouTube for the people who don't know us, and watch it. You learn concept that can help you. But over time, especially the people that want hands-off approach, you can take a VTI, which has less commission than SPY, which is the Total Vanguard Fund ETF. And look, all you do is each time it pulls back, the amounts and the percentage I gave you here, 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 you just add some shares into your VTI portfolio, and you wait. And you wait 20 years, 15 years, and that by the power of compounding or selling cover calls or selling puts, because those are the options also on VTI, you can affect and employ the trifecta of income on VTI. They don't have the best bid and ask spread on VTI, but VTI compared to VTSAX, they have options. So again, I hope it helps, guys. It's market corrections versus a market crash. You have to understand that the market will always crash. It will always pull back. But over time, the market always do that. Even after 25 years where the market was doing nothing, from 1929 to 1950-something, 53, where the market didn't do anything for 24, 25 years, the market comes back and always take the previous high. What I'm afraid is you get caught up here at the top. A lot of kids, a lot of people, even in my family, are chasing, and they keep on adding at the top of the weekly candle, at the top of the monthly candle. And they are not waiting for those 14% to 60% retracement on the stock that you like. So I hope it was helpful, guys. And this was market crash versus market corrections. Hopefully that's helpful. If it's helpful, your likes, comments are appreciated. It is 3:25. I'll put Fred and Travis on the mic, everybody, and we'll observe the market for the market close. We have about 25 minutes. I'll do the market close with you guys. I'll write the cut for that, which is about 3:25. But hopefully that was helpful, and I hopefully puts in perspective, the big game plan versus the short-term game plan. So we are going to go back with the Apple here, okay, because this is one we have been trading very nicely on the downside all the way this morning to the 120 area. Look at this. 121, guys. We exited the on the app. By the way, for those who don't have that, you have the buy zone, caution, and sell zone here that we give you absolutely for free for your ES, which can help you out of the 27 zone. We give you our best 9 zone for the ES S&P 500 futures. You just go into the iPhone App Store, look for day trading zones, and you can get that. Even if you don't join the stock and options alert service, it's okay because we also notify you in real time. See, there's the notification that we have, and you can see the notification getting get out, but also give you some notification about going to the stream. This morning on Apple, we got out at the bottom, guys. Yeah, we got out of the bottom of this Apple, right there. I don't know if people can see the trade or the chart. We got out at 10:06 a.m. Is that okay? 10:06 a.m. Tomer has a problem on the ROI. It says it's 108%, but it's not. It's about 30%, 28% return on our money on that debit spread. It was a 140, 115. But most interestingly, we exited this trade at the bottom at 10:06 this morning, guys. So very important. So hopefully those stuff helps you guys. I'm going to put the cloud tools and the buy cautions and zone. Also look at our net indicator buyer this morning. The net buyers came here at 10 o'clock. This is why I got out. As soon as I saw the hook here on Apple, I was out. Net buyer to resistance. They pull back, higher low, boom. Net buyer, all the way now to this square resistance, okay? For the close of the day. So be careful because this 389.5 on the SPY is going to be a big resistance, which could again gap down tomorrow morning. So be very, very careful, everybody, okay? Travis and Fred, going to reload the charts. Anything that you guys see for the end of the day?
I killed it with the Netflix today. I took a little flyer. I just let the Netflix pull back a little bit, and I hung on. You can't be impatient with it. It's going to come around, and sure enough, it's up 13 points.
Right. Netflix had a critical number on Netflix that we gave our community at 520, 517.
It was a perfect call. Perfect.
And let me show it to you here on the, so you can see it on the 60-minute chart and see it on the weekly charts. Weekly charts, Netflix has been in a range, guys. Look here, our 517, 521 range here, and it's going back to resistance here. That 550 is going to be sticky. If it stays above 550, it's going to be interesting. Look here, the weekly chart on Netflix, and all it is, it's holding a range like Facebook, high, 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 low, 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 and you still have a chance that this thing goes back at 490. So look, it's coming back, squeezing to the 550. I see a huge resistance here on 550, 570 Netflix. Okay, so let's see what happened. Out of all of them, by the way, the one that has the most interesting MACDs that are not as weak as, let's say, Facebook or Apple is this Netflix. Those MACDs never crossed, everybody. The MACDs never crossed, so it's really interesting. But a lot of those stocks, all they've done today, guys, it's hold the double cloud tool support, the full pro tool support. Look, if I show you here, chart after chart from today, and you see a lot of those weekly charts, all they've done is hold the support, guys, of the cloud. They are still holding the edge of the cloud. It was oversold today, and they are finishing the day above the edge of the cloud, like, for instance, the QQQ 320, you know. And that's what I did, by the way. I went out of my 315 on the Qs, and I went deeper at 330 to 290, and I bought some time for January. So all the short positions that I had today, what I've done, it was simple, is I bought more duration, and I went deeper in the money. So I got out of the June, I got out of the stuff that I could, and I pushed to January. I pushed with higher duration and higher prices, everybody. So hopefully this is helpful, those stuff, because well, those stuff are stuff I wish people would have told me when I started trading, instead of holding the March, holding the April, holding the June, right? You really are careful and you push that duration, because duration is safety, everybody. You have more time for your assumptions to come to fruition. And that's the key, okay? Time equals more safety, because your assumptions has more time to go to fruition, right? So let me see something. If you guys have questions also on the field, I love to help you and see if there's some questions that I can help you. Yeah, and that's it. This is very, very, very telling. But look, those are the stuff that I like to share with you guys. I have the big picture instead of talking about every tick in the market. We do that with our tools. This morning we had the QQQ holding the support. We had the Dow Jones Industrial holding the support. Look, all those clouds still show uptrend, but you got to be careful that the VIX is not done going up here from this 1921. You need to be careful that this VIX is going to play games on you. Okay. What else? So let's see. Krishna, it's good to see you. Krishna, if you guys are, usually we don't give the double cloud tools outside the mastery, guys. First of all, come in the live room every month. If you have the job, like you said, you cannot come in the live room every day. We have our mastery private group in the morning. Just send an email to contact@Day Trading Zone, see what you need, what you want, and see if the guys on the back end can help you, okay? That's the best way, guys, okay? Everybody, I think that's it. Travis and Fred, any departing word before we close the stream? I want to help you guys as much as we can every afternoon, 2:45. This week is a test. I'm trying to see if you guys are coming, if you guys are interested. Otherwise, I'm not going to do it, obviously.
Yeah, no, he'll be there.
We'll that takes time, but we want to show you also the tools in actions. They are really, really helpful. The way we called the stuff this morning, the way we looked at the market, really helpful, guys, for everybody. The turn with the volume indicator here, the net buyer, net sellers. This morning at exactly 10 o'clock, at 10:06, I was out of my Apple. And look what happened. I told those guys, and boom, now it's 126. I would not even be surprised seeing Apple around the retest of this 128, 129 at one point. We were oversold this morning. Let's see how they close. You see, you want to see two things. The close today at 4 p.m., 4:15 p.m., and you want to see the gap. Is there another gap, meaning that if they keep on coming back to those lower high SPY, let me go back to an SPY chart, and they sell off again, that's not good. So this is going to be an interesting test, guide, with this head and shoulder on the SPY. Are they going to gap down again tomorrow or not? And that's your moment of truth. I told you this 389 area here is going to be your key area, 389.5. And that's the area that you want to watch and see for tomorrow if it's going to help you in the market, guys. Fred, any stuff you want to say on the advanced decliner? How was the pressure when they came back in allocation?
It was down all day, and all of a sudden it flipped around. I mean, it was like 12 billion, 13 billion. I was showing Travis over $1 billion. Well, right around 2 o'clock, that thing turned around It started going. Next thing you know, it was 12 billion advancing and only a billion declining. So it did a complete opposite. Like it built pressure all day. And as you see, that move was unbelievable. Unbelievable move there. And that's everything. I mean, we went from being down 50 and the industrials were up 100.
Right. And you see all those again, that panic gap down on NEO, that panic gap down on Palantir. They bought that, guys. You know, this is why I really want you guys to think differently about those pullbacks. You never ever chase the tail on the downside, guys. Because even let's say you get scared and you say, well, I have 2,000, 3,000. Say, well, you know what? Today went down 40%, 50% from the top. Today is the day I'm buying 50 shares of Palantir. Today is the shares I'm buying 50 shares of NEO. And see what happens, guys. This is not the end of the world. If it drops another 5 points, you only lose 250. But now you buy assets, right? You buy assets on those pullback, and that helps you tremendously, everybody. Okay? I love you all, everybody. I hope it was helpful. You know, your support, your likes, comments, it's appreciated. But we want to help. If you guys have questions, I want to help. Right. Any strategies of taking an existing call options trade and making an adjustment? If you lose on a call trade, if you have time, you could sell a short call, so it could reduce your cost basis on your long call and give you a little bit of protection. If you don't have any time, you're screwed. If your call expires today, tomorrow, you're screwed. Okay?
Olivia did, Mark, $800 today. She did great. See her?
Oh, Sylvia, good job. Awesome. Awesome. And we talk and we said this morning, guys, we called the term, look, this is not me, I'm not a magician, is our volume indicator net buyer, net seller just turned at 10 o'clock. You know, look, it's in black and white here. You can see it. You know, I don't even need price chart on the SPY. This is what I'm known for this. Net seller, net seller, net seller, net seller. Boom. Neutral, net buyer, neutral, net buyer. And then it's starting those higher lows and higher highs for the entire day. Okay?
People, you know, they go after the stocks that are going up. Watch them. They'll be pulling back. And then, you know, if they're a good stock and they've been up there and you just look back a couple days and see, you know, this stock has been higher.
And I totally agree with Corbin in the chat. Stay away from penny stocks. Stay away from chasing the AMCs and the GameStop. Even AMC had a great move. Look, I can tell you, just looking at my tools, that the AMC move today could be a trap. And I'll show you why, because I think AMC could easily, but look, it already proves being a trap. But we have on the double cloud tools a super support at 245 and $4. I would like to see a completion at 4 to 5. So 4 to 5 on AMC, that's where I think if they go today, they go to the resistance here. I have an 850 resistance. They go to the resistance 850 and they reject back all the way to 4 to 5. Same here on the double cloud tools for AMC, guys. See? I pulled the weekly chart AMC and look what happened. They are going to hold now. This 474, 475.5 is a good area of re-entry. But if you look at the 4-hour resistance, all of this start turning a little bit. Actually, there's a strong turn here, and there's 475, 575 support, 695. So that's the stuff like this. If you are willing to lose $600, right, you could have bought 100 shares of AMC. But this is the type of trade like a coin, the cryptos. I would not sell. You know, I would hold. If you enter here, you need to be patient. I was patient almost 2 years on my crypto, guys, before they did anything. I was 19, 20, and then finally end of 20 to 21, boom, 7 times the money on the crypto. So you got to be patient. This is a game where, this is why I want to refine the trifecta on the iPhone app, you know, when this is for busy people. for people who have work and jobs to do the long-term investing in the trifecta, right? But if you want to grow small accounts more aggressively, then the live trading room or the master is for you. And to get the tools, whether you do long-term investing or short-term trading, to have the tools, you need to go through the bootcamp, guys, because you need to be able to understand how to use and profit from the double cloud tools and the pro tools with the volume indicator. You need to know how to use them properly. But it's helpful, guys. Those stuff are helpful, and this is the stuff that allow me to grab the turn at 10:06. I'll post the trade on Apple on our Instagram feed. Disregard the ROI. We have a bug with the ROI, but you figure the ROI was about 28% in less than 1 month. I love you, everybody. I'll see you on the feed tomorrow at 2:45. Tomorrow, if the market is not too crazy, besides looking at charts and stuff, I want to talk with Travis about budgeting, your income versus your debt versus your expenses, what has helped me, in life, how you use the Mint app, why Mint is powerful, especially if you have multiple accounts everywhere, right? And we'll talk about a book that has really helped me to understand and approaching money as a philosophy, more as a holistic way, not as like, hey, this is bond, this is stock, I know strategies, but I need psychologically to put my expenses and my income into things that are aligned with my life purpose and the stuff that I want to do in the future. Okay? Love you all, everybody. Hope the feed was helpful. Take care, everybody. See you tomorrow, 2:45 p.m. de la tarde. Buenos tardes. With my terrible Spanish. Take care, everybody. Fred and Travis, take care. Thanks for helping.
Okay, goodbye.